Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, GameStop eyes eBay for $56 billion in cash and stock, an audacious bid for a company 4 times its size. eBay says they'll review that offer. Plus, AI chipmaker Cerebras has been looking to raise as much as $3.5 billion for a potential IPO later this month, part of a growing cohort looking to challenge NVIDIA. And OpenAI raises more than $4 billion for a new joint venture that aims to help businesses adopt its AI software. But first, we check in on that extraordinary M&A news. The first dropped on Friday and continues to move shares now. GameStop looking to buy a company 4 times its size. GameStop currently off by 7%, eBay up by more than 6%. But we have to get the inside track with Bloomberg reporter Cecilia D'Anastasio with an extraordinary story and one that the market tries to understand whether it's for real or not. Can you just talk us about the technicalities of what Ryan Cohen here is offering for eBay?
Sure. So Ryan Cohen is offering a deal to purchase eBay, which is, like you said, many times the size of GameStop, along with $20 billion. He says he has received a highly confident letter from TD Bank to acquire. Analysts are unsure this deal will ever go through, but Ryan Cohen says that if he manages to purchase eBay, it would make a lot more money.
Make a lot more money. Okay, let's take this for real, that he's good for the money, he's able to afford. What synergies are analysts kind of trying to pass through at the moment?
GameStop has really struggled over the last several years because gamers are increasingly purchasing their wares in online stores like Valve's Steam. And so GameStop has shrunk its footprint in their retail marketplace, but Ryan Cohen has tried a lot of different strategies to make it work. He's tried esports, he's tried e-commerce, which is from his background as the co-founder of Chewy. And while he's managed to help the business sustain a little bit more than people had hoped, nothing's really stuck. eBay gives him the opportunity, he says, to compete with Amazon potentially, which of course is very, very ambitious in e-commerce.
Well, Jamie Iannone over at eBay has been impressing investors with his turnaround. He's been leaning into AI, he's been leaning into partnerships with Meta, he's been thinking about M&A himself with Depop. Just how do we understand eBay is digesting this and thinking about it from its own business and shareholder perspective?
eBay is evaluating the bid. I think, analysts, again, are not sure whether the math is mathing when it comes to GameStop's ability to purchase the significantly larger company. And we'll see what happens. Ryan Cohen has not given specific details on what he imagines the synergies to be or what he imagines the combined company to look like.
I think Truist said this is stunning and they're skeptical. I mean, just in terms of how M&A gets done, letters from TD Bank saying they're good for it. Ultimately, you're going to be dependent on the debt markets here. But GameStop has always shocked the markets with its meme stock potential, with Roaring Kitty's love, and even with Scion Capital, well, now pivoted more into a Substack newsletter. But the guy who was known for trades on the mortgage market back in 2008, Michael Barry, is coming out saying this could be a really good story.
It could be a really good story. Also, people have pointed out that GameStop loves attention. They make a lot of flashy moves. Chief Executive Officer Ryan Cohen posts very controversial things on social media about the American business market. He has a lot of moving, breaking strategies that he's excited to express. And, that's worked for GameStop. GameStop managed to raise some significant money from the meme stock frenzy, and that's allowed it to sustain a little bit longer. So who knows? This could be a really exciting, fresh, strange way to keep GameStop going, or it could be, like some of the analysts are saying, a little bit improbable.
Well, you're going to be across it. It was a busy weekend for Cecilia D'Anastasio. We're pleased that she joins us to break it all down today. And meanwhile, let's just take a look at the broader markets, because tech stocks are again outperforming. Look, we're building on records that we set back on Friday. We're up about 0.25%, but still the Nasdaq 100, as I say, at a record. And it's not just what's happening over in America. Look, the AI trade is back on track, and we're seeing that play out in Asia trading as well. SK Hynix, extraordinary moves for the high bandwidth memory maker, up 11%. Samsung as well, up 3.4%, even as the company may be having to navigate some sort of strike potential going on with the business. But records being set in Asia, following through from what we saw in America. Can this last? We can see more audacious M&A. What are we going to see in terms of IPOs? perfect person to talk it through is that Nancy Tengler. She's CEO, CIO of Laffer Tengler Investments. Look, your TGLR ETF is already outperforming even the S&P 500, which we note is basically at or near record highs. You're outperforming by 6%, Nancy. Is tech going to remain the dominant force here?
I think so, Caroline. Thanks so much for having me. I do think so. If you just think about what is driving margins on the S&P companies, it is either the technology companies themselves or the use of technology by old economy companies. One of the noteworthy earnings comments came from L3Harris, where they said revenue per employee has increased, this is CEO, by almost 25% over the last couple of years. So if you can produce more with less, then that is what we call productivity, and that will continue to drive stock prices higher, as we've seen in increasing earnings estimate revisions up.
Are you buying that that's AI-fueled productivity gains? There's such mixed messages. BIS out of Europe, really, the Bank of International Settlements has said they'd seen about 4% productivity gains more generally, and that seems to be being what's sustained. But if L3Harris is seeing 25%, what more are these CEOs doing?
Well, so I think you have to listen to the companies. My team sits on all the earnings calls, and we develop themes out of those earnings calls, and then we discuss them. And we're hearing it from a broad base across economic sector group of companies. Not every company, but most companies. I mean, you even heard it from GE Vernova that said, yeah, we're benefiting from AI in the build out, but we want you also to know that we're utilizing AI to produce our productivity, our margins, our output per employee as well, and managing the supply chain. So I mean, just use Ask B on Bloomberg, and it can save you a colossal amount of time as an analyst if in fact you utilize it. So I mean, we've been pounding the AI, the tech trade for about 4 years now, on the theme of old economy companies pivoting to the new technologies, and then in fact the companies that are the suppliers. I think it continues, not forever, but for now.
What's been interesting is the sort of the haves and the have-nots. Now, I'm in no way going to say Meta's not a have-not yet. We can't write them off. But what they don't have is cloud compute that they sell to others. They're busy investing in their own AI infrastructure. Meanwhile, Alphabet was applauded for the fact that it's investing, raising capital expenditure, but also able to benefit with the growth of Google Cloud. How are you seeing earnings play out? Because look, both we've seen from Meta, they are having to cut people. They're having to talk about laying off a sizable amount of the workforce to be able to redeploy capital back into the AI infrastructure. Is that something we're going to hear time and time again? And who do we congratulate for it or not?
Well, so I've talked about it quite a bit on your show, that we got out of Meta. I just didn't like the business model. I didn't see the opportunity. We went into Spotify, which at the time was a good transaction. We were wrong about Meta to some extent, but we were right about Spotify. And we now think that we are somewhat vindicated on the Meta model, because they aren't able to monetize AI in a way that Google and Amazon and even Microsoft are able to do. They are able to improve their advertising business, but Mark Zuckerberg has made these colossal pivots and been wrong in the past. So we own all of the Mag 7 ex Meta. It will have its day again, just like Intel did. The question is, how long will one have to wait, and what is the opportunity cost?
And the global opportunity cost or global opportunity? Look, we were just talking about how Asia trade has just seen colossal gains still for the AI infrastructure bets. Nancy, is that still going to be the winning formula, the chip makers, the designers right now?
I think in the near term, Caroline, but I think what we're going to start pivoting to, and we launched a thematic portfolio with a focus on space and robotics, quantum, and then nuclear, and then, of course, the metals and minerals that are needed to drive those technologies. So I think for the near term, I mean, we're hearing that the backlogs are enormous, again, in the infrastructure names, in the chip names. And I think at some point we will begin to see software as a major beneficiary. Not every software company. We exited Adobe and CRM quite some time ago. And we've been wrong about ServiceNow so far. But I think you'll start to see the winners there, and then you'll see the market pivot at least back to software. So I think there's still a lot of opportunities in this new industrial revolution we're living through.
Nancy Tengler, it's always great to have you on, CEO and CIO of Laffer Tengler Investments, on all things AI and tech trade. Meanwhile, coming up, More AI. OpenAI, Anthropic are each forming joint ventures aimed at boosting AI adoption. We'll have the details next. This is Bloomberg Tech. OpenAI and Anthropic are each forming partnerships aimed at boosting the use of AI tools by businesses. A sourcing saying that OpenAI has raised more than $4 billion for a new joint venture that includes backing from TPG, Brookfield Asset Management, and Bain Capital. Meanwhile, rival Anthropic is partnering with Blackstone, Hellman Friedman, Goldman Sachs, according to a statement. Let's get the latest at Bloomberg's Seth Figerman. This is all about getting private equity companies, portfolio companies, to use the technology, right?
Yeah, and their list of portfolio companies that work with them. And I think it's a real moment in AI. You know, for most of the AI boom, a lot of the focus has been on the competitive landscape of who can build better and more sophisticated models. Now we're seeing a really important vector is who can do better at getting businesses to understand and adopt that technology in their day-to-day work.
There's just different tactics in which it's being deployed. So OpenAI is raising money themselves alongside outside investment for a company that's going to be worth, all told, $10 billion, not including that
right.
funding.
Yeah.
And then how does it roll out? Because they've also had this interesting deal where they helped invest in Thrive Holdings, which is Thrive Capital's ability to sort of deploy AI into other parts of the ecosystem.
Yeah, I mean, on some level, this is being pitched as a separate venture, but OpenAI will be the majority owner and in control of it, according to the sourcing that we have here, which suggests that they will have a key role in dictating how this proceeds. And I think, again, the idea is rather than OpenAI on its own balance sheet within its own ranks, figuring out how to get their technology into the hands of more business leaders, they will now work with this consortium of partners and investors across thousands of potential portfolio companies to do that work.
Meanwhile, the timing, just sensational that Anthropic is announcing the same thing on the same day.
Again, it speaks to the moment that we're in right now. These two companies are following somewhat similar playbooks to bolster revenue and business traction heading into the potential IPOs.
Seth Figerman, across an astounding amount of stories as ever. We thank you very much indeed. Sticking with OpenAI, look, the startup's president, Greg Brockman, is set to take the stand today in a company's legal battle against Elon Musk. Brockman is expected to face probing questions about a personal journal he kept, which Musk's legal team says is evidence he and OpenAI CEO Sam Altman intended to abandon the company's non-profit mission. Now, for all this AI, guess what you need? Compute. And chipmaker and data center operator Cerebras is looking to capitalize on that very demand. The NVIDIA rival, as it likes to see itself, is seeking to raise as much as $3.5 billion from a public offering later this month. The price range in its securities filing really confirms Bloomberg's earlier reporting. Let's get to one of the reporters who's always across IPOs, Bailey Lipschultz. Look, this is a company that wants to offer more inferencing capacity. Is it really a competitor to NVIDIA?
In their mind, yes. And even when I talk to investors, there's a world that they will kind of be another option, if you will. It goes back to kind of the debate around Starlink and saying, okay, well, yes, they dominate that potential market, but there have to be other players. So while there is, at least for now, a monopoly of sorts for NVIDIA, when you look at the partnerships that Cerebras has inked, obviously G42 was a big risk, but now leaning into OpenAI and kind of diversifying the customer flow, it does seem like that's a bit of a bull case. And keep in mind, even with this potential IPO, we're talking about a company potentially valued at $33 billion, not $4 trillion.
Good context. Look, this could all come to bear as soon as May 13th, right? We're thinking that's when the pricing's happening, the trading begins. Is this going to be a retail-focused name? Who's going to be understanding the Cerebras story? Because G42, as you know, as you were just illuminating to us, look, this is a geopolitical story as well.
It is a geopolitical story, but you have to keep in mind that this is a company that fits into the themes that are dominating capital markets right now. AI and AI infrastructure. So we've seen investors lean into the X-Energies of the world that want to promise a nuclear future. We're talking about this name with a number of hedge funds and long-only investors, and they're saying you kind of have to own this company if you play the IPO calendar. So it will broaden across, reach across kind of the broader investor group, if you will. And one thing to keep in mind, with this launch, we're expecting potentially $8 billion of IPOs proceeds being raised in the next 2 weeks. This will be a big part of that, and how this performs will help set the stage for SpaceX likely next month.
And then maybe OpenAI, Anthropic. Look, this is a great time considering where the market's trading at, right?
I mean, that's been the interesting thing, right? Is you look at the SOX. we were up more than 35% in the last month. So when you look at expectations for this company in particular, a month ago, you would have said, okay, 25, 30, sure, you can sell me on that. Now it's like $35 to $40 billion. Just because your comps are up so sharply just starts to make sense when you're looking at how you have to value a company when it's going public is what do your comparables look like, take a little bit of a discount, and that math is kind of working in the company's favor, again, just given the move higher that we've seen for some of those peers.
It's a different company, but it's almost tangential to the likes of a CoreWeave, which is all about trying to solve the compute issues. For CoreWeave, the headache has always been, I've got more customers than you realize. Is this where really Cerebras is going to have to convince the market too?
Well, I think that was the big pitch and the big reason that diversifying away from G42 at least eased some indigestion for investors. Yes, when they tried to go public the first time over a year ago, it was concentration risk, it was CFIUS uncertainty, it was obviously kind of every number of potential bear cases, whereas now the tide really has shifted. So you do have the kind of hyper focus of one customer, similar to a CoreWeave, where there was such a bear case of, okay, well, how reliant are you on one company? Now we're seeing that spread out just a little bit. The interesting thing will be, how do they structure this lockup and what does the performance really look like 6 months from now, as opposed to day one trading, which we've seen kind of can be all over the map.
Well said. It's going to be a busy old week, old month for you, I think, Bailey Lipschultz. We so appreciate it. And all things IPOs. Now coming up, we've got plenty more to come on the world of AI and AI inference. We're going to be hearing from a company that's leading that charge in the private space. CEO of DeepInfra is going to be joining us, Nikola Borisov. This is Bloomberg Tech. In the race to build the next great AI models, the industry is tackling various bottlenecks. One, of course, being access to compute. DeepInfra is trying to alleviate access to AI inference with a purpose-built cloud platform. It's just secured $107 million in a Series B funding, backed by the likes of NVIDIA, Samsung. Joining us now from San Francisco is DeepInfra CEO, Nikola Borisov. Nikola, it is great to have you on the show. Why would NVIDIA want to put money into you? How are you helping the GPU story?
Yeah, thanks for having me. Well, we're helping companies get access to these great open source models, and we're building this purpose-built inference cloud. So it's really you need to build a specialized infrastructure to do inference efficiently, and it really helps everyone access this great open source AI models really well. And I mean, that's why NVIDIA was excited to participate in our round.
We were just hearing that Cerebras, which also wants to speed up AI inference offerings, is going to be tapping the public markets. It sees itself as an NVIDIA competitor. How, Nikola, are you more of an adjacent to the NVIDIA story? How are you looking to help deploy GPUs? Why is your compute different? We've tried a number of different inference accelerators, but we believe like NVIDIA's hardware is still the most efficient, the best to do inference at. And we're just doubling down on that kind of hardware platform. And we like working closely with the teams at NVIDIA on just making inference more efficient. Lowering the price per token is what we really like to focus on. And so that's kind of our path. There would be a lot of demand for inference down the line. Like we think that 80% of the compute is going to go towards inference, but at the moment, we've invested heavily into the NVIDIA hardware stack. What's interesting is you're already processing, 5 trillion tokens per week. How do you get the efficiencies? How do you drive down the cost per token?
It's a lot of hard work, and we look at it through the whole stack of like where we build this kind of inference clusters, which data centers we go in, how we structure them, and then a lot on the software on top of it. We believe like one of the key things is to have very good caching of tokens. As these agents kind of interact with the AI models, they basically make many requests in a loop with roughly the same context. So like, I think KV caches are really key to efficiency of inference. And, we've been doing this for about 4 years. We saw the demand for inference coming, and we really focused on like how do we build a purpose-built inference cloud.
And I think, therefore, you are scaling out. You have, you're operating out of 8 data centers, I think it is already, with this new money, 100 million, more than. Where do you deploy that?
We will use the capital from this fundraise to scale our platform. We will deploy more of the latest NVIDIA chips and then scale our inference platform across the US. But also we're looking to expand in Europe and Asia later this year.
Samsung, also part of the strategic investors. It's not just GPUs from NVIDIA one needs. You need an awful lot of the high bandwidth memory. We know about memory costs soaring because of the AI demand. Is that why Samsung comes forward? How are you thinking about the supply chain headaches or not that you might face?
Yeah, in the last since the beginning of the year, it's been like struggle to find some of the chips that we need for our inference clusters. Memory and disks have been an issue, and so it's important for us to have, in our corner, good investors that they're helping us, including Supermicro and Samsung and NVIDIA, to make sure we have the right supply and we don't struggle as much. But the chip shortages are pretty real, and I feel like, inference needs like 1,000,000 times more compute than like traditional computing. And so we would see more and more demand for chips, including CPUs, GPUs, memory.
Nikola, it's been great speaking to you. Thank you very much indeed, DeepInfra CEO Nikola Borisov, on the latest funding round. Coming up, we've got more on funds being deployed in AI-adjacent areas, particularly crypto. We're going to be speaking to Katie Haun in a bit to talk about her new $1 billion fund and the state of the crypto market. But let's also focus in on these markets more broadly right now. Crypto had been outperforming, tech had been outperforming. Actually, we're starting to see a pullback. There is tension once again, particularly with the UAE. The UAE is saying its air defense systems are currently responding to a missile threat. They're posting on X about a third missile threat that they've currently been facing. In particular, this is in response to Iran. Geopolitics once again front and center as oil prices extend their gains. Brent crude is to see $114. That means risk sentiment just turned sour. Nasdaq 100 now down 0.3%. We were higher at the start of this particular show. The semiconductor index also off by 0.8% off of its record high. We're going to keep you up to speed with what's happening in the markets and in geopolitics more broadly. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We look at broader markets for a moment now because, well, we're back in risk-off sentiment amid rising geopolitical concerns regarding the conflict with Iran. We're currently off by 0.2% on the Nasdaq 100, flicking into negative territory. We had been higher. You're seeing the semiconductor index coming off of its record high. Brent crude up to $114, let's call it. This is UAE is issuing missile warnings. Rising tensions are risking the US-Iran truce, and yet it's just coming hours after an oil tanker owned by the UAE state oil company was also struck by Iranian drones. So keep an eye on what's happening with the bond market as the anxiety builds and we see maybe inflationary pressures coming from oil. We see the 30-year eclipse 5%. Look, we haven't seen this sort of level on the 30-year bonds in terms of yield since July. You're seeing 10-year ramp higher 6 basis points, 2-year also up 7 basis points, let's call it. So we keep an eye on the broader market. We also keep an eye on risk sentiment just across this entire asset classes. And I want to focus in on our big number today. It's $80,000. Guess what managed to touch it again? Bitcoin. For the first time since January, it has seen some love as the tech trade has powered on higher in the previous week, and we hit a record high on Friday. And of course, this asset trades over the weekend. I want to talk more about the crypto sector with Bloomberg cross-asset reporter Isabel Lee, fresh back from an event in Vegas. What are the vibes right now in crypto?
Honestly, very optimistic and enthusiastic. Like when I was there, it was in Vegas, the Bitcoin conference from Monday to Wednesday. everyone was just so happy to be there. There were orange suits, orange cowboy hats. CFTC Mike Selig is there. Paul Atkins of SEC was there. They were wearing orange neckties.
Why? Why the orange vibes? Is just the color of not of a Bloomberg terminal.
Unfortunately not. Could be. No, orange is like the unofficial color of Bitcoin. And every booth had a big B plastered on it, which is the symbol of Bitcoin. You could just feel the vibes in the air. Mike Saylor again predicting 10 million for Bitcoin. Eric Trump dropped by on Wednesday saying 1 million for Bitcoin. So even if the daily price fluctuations weren't any more a focus there, the big 1 million goal is still in the horizon, or 10 million if you ask Saylor.
But was any of this Bitcoin and then some? Look, what we keep seeing is that there are other areas of excitement, more infrastructure being built, more thought around where the world of cryptocurrencies go rather than the OG in the space.
Definitely. So they were thinking about Bitcoin and the future of it. Of course, there were a lot of talks about AI and how that will affect Bitcoin, especially when it comes to mining. And I've talked to a couple of people who really still insisted that Bitcoin is different from other crypto assets because Bitcoin is Bitcoin. It's the original. It's the largest. It's the oldest. And others are pump and dump. You know, others have smart contract that may vanish in a few minutes, but then for them, Bitcoin is the OG. And I'm sure now they were looking at 80,000 too, because for a while, the Bitcoin price has been hovering between that and not really hitting 80,000. So I'm sure if the Bitcoin conference was this week, they would be happy.
So they're enthusiasts around the store of value mentality, or that more can be done with cryptography more generally?
It's still the store of value mentality, although I did talk to some people roaming around. A first-time attendee said that, what's next after this one? Because what else could bring this price higher? I mean, it's already so institutionalized. I also talked to Adam Back, who is not Satoshi, according to him. He did say, again, he's not Satoshi. And I asked him, how do you feel? Because the institutionalization of Bitcoin kind of goes against the ethos of Bitcoin. But he was like, no, actually, it's more access for everyone. And he said when people say that BlackRock or Strategy are the biggest holders of Bitcoin, he said they're really just the custodians in his eyes, but it's still the people who owns it. So really lots of interesting characters. It was an electric kind of conference. It was really good vibes all around. If you're a skeptic, I think you'd doubt it, at least if you're there.
You're not wearing orange, I note. Isabel Lee, it's great to have her on the show on all things crypto. Look, I'm very pleased to say we can bring in someone who knows a thing or two about the world of crypto. Katie Haun's with us, who's made her name investing in digital assets and crypto startups. Her firm, Haun Ventures, has just closed a $1 billion fund. You've had notable exits. I think of BVNK, you were acquired by MasterCard. Another startup that you backed early on, Bridge, has been bought by Stripe. Katie, is this what it's about? Is it about finding the startups that are likely to just drive this ecosystem forward?
Good morning, Caroline. Thanks for having me. Yeah, the world's a very different place than it was 4 years ago when we raised our first pair of funds. And we're really excited now to have $1 billion in fresh capital across a pair of funds to back founders in what we say are building the new economy. And the new economy is we think there's an intersection really between AI and between digital assets. We're calling it an agentic future. That's one structural shift we've seen. Another structural shift we've seen is the creation of new assets, things like stablecoins.
That has been an area that clearly you saw coming, you lent into, and the stablecoin ability. I think we just had a few tech issues with Katie. We'll get back to you in a minute. There we are. I think the stablecoin area has been something that clearly you've seen work with M&A and portfolio companies being bought by really institutional adopters who are now trying to embrace, I think of the likes of MasterCard, for example. But what's happening in terms of the AI adjacency? For those who've been hidden away from how crypto is now thinking of itself as the future of AI agents, how does that work?
Well, if you think about a world where financial products and services are really being built for an end user that's not necessarily a human, but might also soon be an agent or a computer, that's a really different world. I mean, if you think about agents, one thing we humans do? We stop. We have a finite period of time that we work during the day. So we might be okay with a bank that's closed on a weekend or that has a wire cutoff or deadline or banker's hours. But of course, AI agents are powered 24/7. They work globally from day one, and they're always on. And so I think that there's a lot of opportunity there in what we're calling the agentic finance sector. But you also mentioned, Caroline, stablecoins, and I think that's another area where we've seen the digital asset space grow, and we're seeing it grow ever more. Of course, now we're at a point where stablecoins, and you mentioned BVNK, which just exited to MasterCard for $1.8 billion. By the way, that was MasterCard's third largest ever acquisition. And I think it's reflective of that you now have double-digit $1 trillion in stablecoins. And this is an innovation that didn't even exist a decade ago. And if you can tokenize a dollar, it turns out you can tokenize other things. So we see institutional players like BlackRock and fintech giants like Robinhood and Coinbase start to tokenize stocks. And it turns out you can tokenize all kinds of other products and services.
For that to really be adopted is, of course, a future where the regulatory environment has been far more warm, shall we say, towards crypto and these innovations. And that's where you sit at this intersection, Katie, that's so interesting. I mean, Brian Armstrong himself, someone that you've helped oversee the company of Coinbase, you before A16Z, what was so interesting about you is also you sat on the DOJ side of things. You understand government. You can talk to both sides of the community. What is the regulatory environment like right now?
Yeah, look, I've been following the flow of assets my entire career. I started my career actually at the Supreme Court as a law clerk to Justice Kennedy, and then spent over a decade at the Justice Department. And what I can tell you is this is one of the most transformational periods in technology and finance that I've really ever witnessed. You mentioned regulatory, Caroline, and I think that's a part of it, but also the infrastructure is a part of it. And let's also be honest, the institutional story is a part of it. As far as regulatory environment, I think people often also overlook what the courts have been involved in shaping the regulatory environment. And this has been happening kind of in the background over the last several years. Now we have something coming up, which is the crypto market structure bill. And so everyone's eyes are on that. And of course, we had the Genius Act passed last year.
There are still lawmakers that need convincing. And Katie, I think of Elizabeth Warren, who's worried about perhaps one of your new and really, well, many would say the exciting startup that has been co-founded by Palmer Luckey. Now, you're in a company that is Erebor, which is all about, I think I'm pronouncing it correctly, right? Erebor is yep. This new sort of bank. It's just had OCC sign-off that it's able to go out there and after got an application and granted a preliminary application at least for approval to become a bank. But Elizabeth Warren is like, that's happened all too fast, and it seems to be that they're close to the administration. How do you get comfortable that these companies are being vetted in the way that you want to see them being vetted?
Sure. Well, we always look at the founding team whenever we're looking for an opportunity to make an investment. We look at the founding team, and you've alluded to part of the founding team here. So we think this founding team of Erebor is incredibly strong. And actually, Palmer Luckey's co-founder is a founder that we had backed in our first fund. So we have a long history going back with him and have seen him over the years. And we are actually the second largest investor, I believe, at this point in Erebor. And I think the exciting thing about Erebor, so it's also the product market fit, and they've just crossed $1 billion in deposits. And it's also the size of the opportunity. And that's where I think Erebor and companies like it really shine. I mean, it's really built for the future. And if you think about it, it opened on a Sunday, Caroline. And I think, who's ever heard of a bank opening on a Sunday? Now, I think that for the digitally native generations, and certainly for the AI native generations, wire cutoffs are going to be a thing of the past. It will be kind of like when you see a payphone booth on the corner and you're like, what is that for? In a world where everyone's now on their cell phones.
Very briefly, Katie, you've already had success with exits on the M&A side of things. But you personally have invested in some of the most exciting companies we're anticipating IPOs from. SpaceX, I know that you're in Anduril, another Palmer Luckey business. You're in OpenAI. Is the market feeling solid right now?
You know, I think right now what we're seeing a period of transformation and tremendous opportunity. And I think this is something I've been alongside the unfolding of transformational technology my entire career. And there will be ups and there will be downs. And one thing I've noticed is that there are periods of irrationality on the way up and there are periods of irrationality on the way down. And our job as long-term venture investors who are investing, by the way, Caroline, over a 10-year decade, although your colleague Natasha reported that we had already returned capital 4 years in to some of our LPs around the world from our first pair of funds. We're looking at what the world looks like in 10 years, not what it looks like right now. And we think at bottom, it's a period of tremendous opportunity, generational opportunity.
Natasha Mascarenas did that great story, all talking about how you were able to lean into dislocations in the market and beaten up areas of crypto more broadly to return those funds to LPs. Katie Haun, it's great to hear about the new raise, the CEO and founder of Haun Ventures. Congratulations on the latest $1 billion that has been putting to work in 2 funds. Meanwhile, coming up, we're going to be live from Milken Institute Global Conference We speak with Scott Turner, his US Secretary of Housing and Urban Development. This is Bloomberg Tech. Palantir earnings, they're out after the market close later today. So far today, shares in the AI firm is up 1.5%, outperforming the rest of the market, but they haven't outperformed the rest of the market since they peaked back at the end of October, losing a significant amount of market capitalization as they got caught up in perhaps the software anxiety and sell-off. Is that right that it is? Let's talk about what to expect with Bloomberg's Lizette Chapman. Fundamentals first. We always know there's fireworks when it comes to Dr. Karp, Lizette, but what are we expecting in terms of growth of the business?
Right. Well, analysts are expecting another massive quarter of a lot of growth. 74% revenue spike, a doubling of profits from the same period last year. This is pretty consistent with past quarterly growth that they've continually set the bar high and asked Palantir to deliver. There's a history of Palantir meeting or beating those expectations. So that's what a lot of people are looking for. That's what some of the betting markets are looking at as well this morning.
Oh, I like that you're folding in some of the betting, or at least different ways of predicting which way the market's going to go. Lizette, the market, if you're looking at analysts, think that the price target is much higher than where we currently trade. So is there sort of a vibe shift that we can get from Dr. Karp, as well as clearly the growth that they continue to deliver from the bottom line and top?
Right. He will definitely be speaking with analysts today. He typically issues some type of shareholder letter as well, where he outlines everything that you just kind of alluded to with the vibe shift, trying to distance Palantir from the other AI software stocks, and also to position it as a type of company that is going to support U.S. policy, no matter how controversial or difficult. There's also a lot of focus right now on what they've done to support efforts in Iran, also in Israel, and with U.S. Department of War, as well as many of our allies. So there's going to be a big focus on. He usually speaks to that topic as well, and that's what many will be looking for him to continue with that vibe.
Bloomberg intelligence analyst Mandeep Singh is talking about the government segment, how it continues to benefit from the company's exposure to these increased U.S. defense spending on products such as Maven amid the war in Iran. But the commercial side, that really has been an area of growth. Are we expecting, what's expecting to see that pick up, and particularly if it's just U.S. bound or whether we see more international adoption?
That's a great question, and I think that's something that a lot of people are going to be looking at if they've been able to drive it internationally. U.S. commercial growth has been on a blockbuster tear for at least the last year plus since they introduced AIP, and so they're looking at growth rates for about in the 90% or so for commercial growth, and for the government growth they're looking around 59%. Again, government is about half of the revenue. It's about half and half, and slowly commercial is starting to, build up. They haven't been in commercial as long or as strong as government. So that's an area that a lot will be looking at, specifically here in the U.S., whether they can gain traction abroad as well.
And then there's the man, the myth, some would say the legend himself, Dr. Karp, the way he speaks to his own loyalists when it comes to shareholders. He's often quite rude to the analyst community and in Wall Street more broadly. But he's had some thoughtful insight as to the future of the workforce and where humanities takes us in terms of an area of study. Are we expecting any sort of philosophical perspective coming today?
I think that would be a pretty good guess that would land well. He and CTO Shyam Sankar have been on this quest, as you say, to kind of mobilize the, not just the software and the bits, or not just the bytes, but also the bits. And so, they are both looking for, to kind of establish that and kind of continue that narrative that not only Alex Karp wrote about in Technological Republic, but, Shyam wrote about in his new book about mobilizing the techno-industrial workforce and reshoring a lot of the industrial and manufacturing capacities that are, have traditionally been abroad, that they're looking to bring back onshore here in the United States. They had a commercial software win recently with Cleveland Cliffs to use their AI software to assist with the steelmaking capacity. So it's a pretty good bet, like you said, Caroline. You've been watching these earnings for a long time as well. That he will continue with that and talk really more about the big changes to American society writ large that Palantir and its software is looking to enforce.
Well, we're lucky to have you watching them for us tonight, Bloomberg's Lizette Chapman. Thank you very much indeed. Coming up, we're live from the Milken Institute Global Conference. We're going to be speaking with Scott Turner. He's the U.S. Secretary of Housing and Urban Development. This is Bloomberg Tech. Let's head out to the Milken Institute. Balance of Power co-host Joe Matthew standing by with a special guest. Joe.
Yeah, Caroline, thank you. The Secretary of Housing and Urban Development is with me right now, live in Los Angeles at the Milken Global Conference. Secretary Turner, it's great to see you. Welcome to Bloomberg.
To see you. Thank you, sir.
Questions about the housing market on this day that the 30-year Treasury tops 5%. This is a big deal for our audience. It's a big deal for a homeowner or anyone looking to buy a home. How much will interest rates be a challenge to what you're trying to do in increasing access to affordable housing?
Well, thank you so much. I think you see, the President Trump is laser focused on housing affordability. He's focused on keeping our country safe, from a regime having a nuclear weapon, but also laser focused here domestically to make sure that the Americans can achieve the American dream. And so as we see the fluctuation in interest rates, we're also, looking at the regulatory environment to bring down burdensome regulations to make it easier for builders to build and for buyers to buy. So I'm grateful for the President's leadership and that HUD. We're following that and encouraging localities to do the same.
You were pointing specifically to your rescission of the IECC.
Yes.
An energy efficiency requirement that the Biden administration put in place that you say added over $30,000 to building a home?
Yes, sir. So this is the final determination for 2024 during the Biden administration. Really, it's the International Energy Conservation Code. And it added up to $30,000 per project when builders are already building to these energy codes. And so we rescinded that to make it easier for builders to build, which will make it better for buyers to buy. On top of that, $100,000 in regulation and regulatory fees is added to the final price of a single-family home. That's not sustainable in our country. So we've been very focused on bringing down the regulatory environment, making it easier for builders to build, better for buyers to buy, and raising the supply in our country.
We're having a big conversation in America right now about affordability. We talk about it on the air all day, whether it's $4 a gallon gas, although where we are, you've probably seen, Mr. Secretary, it's above $6 in California, which is pretty wild. But the cost of everything from food to gas is an issue for Americans, making your mission that much more urgent, but also more difficult, no?
Well, like I said before, the president is laser focused on domestic policy. From the time he was campaigning to the time he came into office, he said, we're going to make it more affordable in America. And I know personally, being in the cabinet and knowing the president, working with him, that to be able to help Americans to afford to buy a home, to buy groceries, to buy medications is top of mind for the president. And so you see the actions that have been taken, the rescission of these regulatory environments, the taking down of burdensome regulations to help American people is a great priority for the president and myself. And so while it may seem to be difficult, we've made great strides, but there's still a lot of work to do.
We're out of time, Mr. Secretary, but how many houses can you build if you stay with President Trump for the remainder of this term? How many affordable units can you add in this country?
Well, we're going to add many, and in particular with opportunity zones, there's already been 400,000, so we want to duplicate that and do even more.
It's great to see you. Good luck at Milken, and thanks for being with us.
Thank you.
Secretary Scott Turner with us live from Los Angeles. Caroline, back to you.
Joe Matthew, so good to hear from you on the other coast right now, West Coast. All things Milken will be throughout the day and the week here on Bloomberg TV. But now that does it for this edition of Bloomberg Tech. Don't forget to check out our podcast. You can find on the terminal as well as online on Apple, Spotify and iHeart. We return to the markets, which have seen some geopolitical anxiety around them today. We currently see we're off by 0.3% on the NASDAQ. NASDAQ 100 are under pressure as we see, once again, missile threats for the UAE. The semi-index is off by 0.6%, down from a record high. Brent crude up to $114 a barrel. We're seeing yields move higher, particularly in the world of the debt markets. Bitcoin, though, 79,000. This is Bloomberg Tech.